Last week, the Fed pulled the trigger on Bernanke's QE3 howitzer, and the markets responded in a spectacular fashion, but some worry that stimulus will come with a hefty inflation price tag. According to ShadowStats figures, the true inflation number is nearing the double-digit level. So it's a pleasure to welcome back to the show the director of the TrendsResearchInstitute, Gerald Celente, to help decipher the latest Fed speak. His team produces the TrendsJournal with hard-hitting, in-depth analysis of the economic and socio-political and cultural trends. Welcome back, sir.
Hello, Chris.
I wanted to begin the dialogue, if we could, today with the Fed's latest announcement of QE3 and zero interest rates into 2015. You know, the domestic economy is clearly in trouble. Unemployment still over 8%. Fed is attempting to avoid a double-dip recession here, and few expected an open-ended Fed pledge to buy $40 billion worth of mortgage bonds monthly and continue this Operation Twist for so long. The inflation is the ultimate check that's going to have to be paid. What do you think, Gerald?
I think it's one of the checks that has to be paid. You know, it can work in other ways as well. In other words, a devaluation of the dollar. You know, does that mean inflation? Well, if all of the currencies get devalued, you know, then it's really, in one way, it's always inflation. It's just how you add it up. The bottom line is the dollar is going to be worth less. To give you a little understanding of how trends work, in the sense that tracking trends is the understanding of where we are today, how we got here, and where we're going. I want to read you something from a TrendsJournal that we wrote in the summer of 2011. Fed's massive stimulus had little impact, Greenspan says. This is from a CNBC June 30th, 2011 interview, and we wrote about this to make a point. The Federal Reserve's massive stimulus program had little impact on the U.S. economy besides weakening the dollar and helping, to some extent, U.S. exports, Federal Reserve Governor Alan Greenspan told CNBC. In a blunt critique of his successor, Fed Chairman Ben Bernanke, Greenspan said the $2 trillion in quantitative easing over the past 2 years, and let me interject, it was more like $21 trillion when we looked at the real numbers, had done little to loosen credit and boost the economy. Quote, there is no evidence that huge inflows of money into the system basically worked, Greenspan said in a live interview. Greenspan said he would, quote, be surprised if there was a QE3 because it would, quote, continue erosion of the dollar. So Greenspan is half right and half wrong. We said there would be a QE3. We said that there would be more stimulus, and we said it would erode the dollar. Now, I'm making this point, Chris, because it's not only the United States that's doing it. We're seeing it with Mario Draghi, with the European Central Bank, the former, head of the Goldman Sachs division over there in Europe, the vice chairman, by buying up all of these worthless sovereign debt that is bringing down the European countries, in Italy, in Spain, in Portugal. They're buying up this worthless junk by printing more money. And then we just heard from the Bank of Japan. You're going to throw some trillions of yen in there, too, in stimulus. And then we heard from the Chinese government. Well, we're not going to call it stimulus. We're going to call it infrastructure improvement, and we're going to pay for it. So they're all printing this digital money. So whether it's inflation or a devaluation of the currencies, it's academic. The fact is that, in my looking at it, gold is going to be worth more, and all of those currencies are going to be worth less.
Now that the Fed has opened Pandora's box that QE may never be contained, doesn't seem to be a viable exit strategy here for the Fed. You know, Dr. Bernanke confirmed this theory, leaving QE3 open-ended. And of course, that's a new twist in this story. He noted that he'll buy toxic mortgage securities until unemployment is no longer a problem. That's quite a tall order, don't you think?
Yeah, well, it's ridiculous. It's not going to happen. And why? Let me ask you this. Why would anyone take seriously what wrong again Ben says? And I don't mean that to be sarcastic. I mean to be fact. Here, this is from our autumn 2010 Trends Journal. Excerpted from a CNBC interview, 29 July 2005. They asked Ben, "Tell me, what is the worst-case scenario if we, in fact, see real estate prices actually come down substantially across the country?" Answer: "Well, I guess I don't buy your premise," Ben says. "It's a pretty unlikely possibility. We have never had a decline in house prices on a nationwide basis." I'm going to give you another one. This is in 2007, as the big unraveling begins. Bernanke: "There's not much indication at this point that subprime mortgage issues have spread into the broader mortgage market, which still seems to be healthy." Yes, still seems to be healthy. He doesn't have a viable exit strategy. Your analysis, you know why he doesn't have a viable exit strategy? Because they've never gotten out of the system. They never have a viable exit strategy. Do our military commanders have a viable exit strategy when they start war? No. Because, you see, these are still high school kids that have just grown up but really haven't grown up. Just like a high school kid, a teenager, commits an action or makes a decision for which they never think about the consequences because they're only kids, these guys are still kids. They never think about the consequences.
I think it's well said. You know, the last commander of ours who really seemed to see the big picture was Stormin Norman, you might recall, in 1991-92, his 4-day war. Apparently, he learned his lesson from history, from the Vietnam War, that we do need to have an exit strategy. And once again, though, we're focusing on economics today. I mean, there is desperation right now, not, as you mentioned, in the ECB. There's desperation at the Bank of England. There's desperation at the Bank of Japan. And most importantly, at the Fed. And I think that's a good segue into my next question for you. You know, the Eurozone also in trouble. Greece, Portugal, Spain deteriorating. We heard recently that Spain asked the ECB for 100 billion euros for its banks. Depositors withdrew 70 billion, though, recently. Andalusia, Valencia, Murcia, Catalonia all requested federal assistance without any strings attached. 20 billion more euros are required just to keep the government cogs spinning. As I mentioned, big cash outflows. They're threatening the national sovereignty here. Unemployment way past depression levels. Not even recent nationalization of Bankia helped much. 5.4 billion in additional bailout funds are needed. How much is QE3 really about the Eurozone disaster, and is the Fed secretly bailing out Europe in your estimation?
It's the same thing. When you see what the ECB is taking care of its own, when you see where that money is going through with the bailouts over there, it's going directly into the banks. It has nothing to do with bailing out the countries. And where the money is going, then it's going to the so-called investors that made bad bets. And because they're members of the White Shoe Boy Club, they're also getting interest on their losses. So that's where this money is going. And again, you know, people, you know, they rail about, oh, this country's turning into a Marxist communist. No, it's not. It's fascist. The merger of state and corporate powers. And then when you talk more about, you know, where is it going? As I mentioned, you know, Greenspan was wrong in saying that he would be surprised if there was a QE3. But he was right because he said it would be the continued erosion of the dollar, and it basically would not work. And it's not working. How could anybody think it will work when they've dumped in, as you well know, the numbers that came out because of that one-time reporting that was pushed through by, I think it was Bernie Sanders and Ron Paul, that the Fed had to report what they were doing over the period of time, was that the number really adds up to now about 23 trillion. And when you talk about what's going on in Europe, what's not making the news are the demonstrations that are going on throughout Portugal, throughout Spain. Millions of people taking to the streets, and not just one day. This is going on and on.
In some areas, over 50% unemployment. I mean, fodder for explosive unrest. Even the king of monetary stimulus himself proclaimed recently, monetary stimulus alone cannot solve our problems. In other words, the fiscal cliff cannot be avoided by merely the printing press on its own.
Well, this isn't a political, this show doesn't talk a lot about politics, but for me, only speaking for myself, let's stop these wars, let's cut back on this defense budget. Let's bring the troops home and let's use their talents and strengths to rebuild the country's infrastructure. And also, let's stop all of this corporate welfare. My master's degree was in public administration, and all this baloney about economic development agencies is just that. All they're doing is giving corporate welfare to companies, big companies, give them tax breaks, loan guarantees.
Gerald, the statistics are staggering. It supports your thesis. The corporations, major corporations as a whole, $2 trillion in cash. And according to recent statistics, the banks are sitting on almost that much, $1.5 trillion in cash. It's got to start at the bottom and work its way up.
You see, what they did is they deregulated the entire nation. Laws that were put in place to prevent the robber barons from stealing everything have been taken away. The Clayton Antitrust Act, the Robinson-Patman Act, the Sherman Antitrust Act, Glass-Steagall. Exactly. So all of these things have to be put back into place for us to have a renaissance, so that then there is a purpose for an entrepreneur to borrow.
We've got the Dodd-Frank Act.
Dodd-Frank like Mickey Mouse?
They've already circumvented. That was something I wanted to get to. I didn't think we were going to have time today. But they've already circumvented most of the fail-safes put in place by the Dodd-Frank Act simply by changing the way that these derivatives are backed. The collateral issue that Dodd-Frank tried to protect investors in the nation, and they wanted to demand that these unregulated derivatives had a more substantial collateral requirement. And they've already found ways around that. So the flimsy legislation that's been put in place is just not going to be enough. Our predecessors, they learned their lesson. It was called the Great Depression. It was called the crash of 1929. It's different this time, and well, here we are again.
What's different this time is the last time they chastised the bankers and put them in their place. This time the bankers took more control. The too big to fails got bigger. The gap between the rich and the poor got wider. The banks were lionized, and the people are now being demonized, just as you hear from different candidates out there blaming the problems on the people. So the whole psychology has changed, and that's the kind of things that happen in a fascist society. And again, I don't say that just tongue-in-cheek. I say it as a matter of fact. Where is all the money going? The money's going to the too bigs, and it has been, and now this money's going there as well. So this isn't really about bailing out the people. It's about bailing out more of Wall Street. And again, look at the numbers coming in. Oh, they're bragging that, housing starts are going up, and so too are housing sales. Yeah, they're only 1.2 million below what's needed to be called a normal growth market. So on every level, we're seeing declines. And then when by the way, and I've been on your show, and I've been saying that there would be more QE3, and I also announced, I believe it was on your last show, that I was back in the gold market. And I did. I got back in the gold market when gold was over $16.67. And I kept saying that it had to break over the $16.65 mark and stay over it for a while before it showed real strength. And I said the next breakout point would be $17.70. And after $17.70, if it holds over that for an extended period, it's the beginning of the next gold bull run. Why do you think people like Soros and others are getting into it? The more of the banks, the central banks that keep printing that digital money, the greater the rise of gold and silver are going to go.
George Soros, John Paulson, huge buyers, but interestingly, he sure used the temporary pause there that refreshed as an opportunity to load the boat on the gold ETFs. Paulson, by the way, owns more than 50% of his fund now in the gold ETF, the largest Goldseek ETF. That's a paper promise, and if you really read between the lines, read the fine print, there are paper machinations behind the scenes on these ETFs when the day comes where Bank of America's latest target, 3,300 gold, comes to pass. These people who have got these paper promises, and they're going to be, sorry, it was based on the COMEX contracts, and COMEX only had 3% of gold backing its contracts.
And I hear, different stories, for example, that for the GLD, the gold is supposed to be in the HSBC vaults, and HSBC is one of the biggest shorters of gold. So this is what I hear. I don't know. I want to make that really clear. But, some people, that have pension programs and retirement programs, they're buying GLD as an investment option, and there really aren't a lot of others. So that risk factor is there. But, when you look at all the risk factors, they may not be able to collect that gold, but they possibly will be able to collect that money at some point. No, but if you're in the stock market, and let's say you own those legacy stocks like Lehman Brothers or Chrysler or General Motors, you end up with zilch.
The mainstream media haven't seemed to have picked up on how detrimental this expansionary process is, the stimulus to retirees and savers. Look at Treasury rates, hovering around 1%. Good luck finding a CD, a certificate of deposit that's much higher. So $1 million retirement portfolio in conservative investments is yielding about $10,000 just at the time when the cost of living is skyrocketing. How can you retire on $10,000 a year? If you've worked hard your whole life, you've saved $1 million, which is substantial nowadays considering the fact that most people claim they're living from paycheck to paycheck. Over half of Americans right now claim that they have less than $1,000 in savings. So you're going to have to either be a professional gambler or a multi-millionaire just to have a humble retirement.
Well, they've robbed the future of America, and it breaks my heart. I look at it all the time, and I keep wondering why people can't see it. And as you watch the presidential reality show unfold before our eyes, and if anyone watched the two conventions, it was like watching a cross between an NFL halftime Super Bowl show and a revival megachurch meeting. And really, and I'm saying to myself, how could anybody believe this stuff as they're destroying the nation? So it's going to continue to decline. The answers that they come up with are no answers. Again, the new QE3 is, as you point out, another element of it is keeping interest rates at all-time lows, and they're talking about through 2015, and that's robbing the savings of people in a country where they used to teach us that it was good practice to save. So it's very disheartening to see that our country has been taken over by the mega corporations. Look, who made up this stuff that hedge funds own corporations? When I was a kid, no such thing existed. When I was a kid, there was no Walmarts or Targets. There were two Macy's. One was down in Herald Square. The other one was up in Yonkers. They used to have a thing called haberdashers and women's shops. And so all the business has been taken away, the small farms, the family farms. What was it, like 55 million of them during the Great Depression, and now we're down to about 2 million farms in total. So one after another, everything has been gobbled up by the bigs, and all the politicians are nothing more than wise guys for the financial crime families. That's all they are. Just want to mention one more thing on top of that. There's a whole new element of society that never existed before, where the banks and the government made it possible to coerce young little kids, teenagers, into taking out loans to go to school, which will make them indentured servants for the rest of their lives.
Gerald, more than $1 trillion in student loans right now, and it even eclipses all of the credit card debt in this country. Good luck discharging it.
Well, that's what I'm saying. Well, you know why you can't discharge it is because that actually began under the Clinton administration, and then it was followed through under the Bush administration, pushed through by Vice President Biden, who was then Senator of the loophole state over there in Delaware. So it made it impossible. So now what you have, another element on top of this grapes of wrath scenario, is you have millions of indentured servants. It should be a criminal activity. Take a signature agreement to debt from a teenager that doesn't know what they're talking about, that now they're in debt $150,000 because of a college degree.
The actual official number is in the neighborhood of $30,000 to $40,000 is the typical 4-year college graduate's debt number, somewhere in the neighborhood of, I want to say, $27,000 to $40,000.
again, and not if they choose to keep going on. And and I don't believe any of their numbers, because I don't believe a thing they say. Again, just go through the facts, and they lie about everything. And, when you mention about inflation, that you don't add food and fuel into the core inflation number. TrendsJournals are quarterly, and there's nothing like it in the world, and I'm not saying it, because we publish it. It's a fact, and it's the only magazine out there, and it's a magazine, 44 full-color pages, no advertisements, and that shows you what's going to happen and how to prepare for it. It is truly history before it happens. The foundation of the TrendsJournal is to help you prepare, prevail, and survive in these coming hard times, because they're not going to get any better. As a matter of fact, the people that are in charge, regardless of what mafia family is in charge, none of them are going to make anything better. It's only going to be a matter of who could destroy it the slowest. So we want people to be prepared so they don't have to go down with the ship of state. Our website is TrendsJournal.com.
Gerald Celente, we want to thank you so much again for your time, sir.
Bye-bye.